In recent years, there has been a growing call to revive interest in local stocks, dating back to 2015 when the Society of Remaziers appealed to the finance minister for urgent measures to restore confidence in Singapore equities. Despite efforts by the Singapore Exchange to amend listing rules and introduce initiatives like dual-class share companies, concerns about the market's decline persist. To address this, the Society of Remaziers proposed a Big Bang approach, suggesting the listing of large government-linked companies to spark domestic interest, similar to the impact of Singtel's listing in 1993. However, the market has struggled since its peak in 2007, with less than a third of listed companies trading above book values.
Fact that many Singaporeans are actually investing in overseas markets. How do we revitalize Singapore stocks? Now, in order to restore investor confidence, SIAS recommends a three-pronged approach. Firstly, restore investor confidence, address issues such as fraud and criminal actions through measures like setting up an ombudsman office, perhaps, and tightening director requirements. Secondly, we need to take action on undervalued shares. Listed companies must take action if their shares trade below book value. SIAS will impose questions on the annual report and ask what initiatives they've taken to do this. Thirdly, list large GLCs and study feasibility of GIC investing locally, and this would actually attract more investors in the local market.